Hello everyone, thank you for joining us today and welcome to this educational presentation of a simple, easy to follow process for daily stock selection. Now I know a lot of you that trade stocks, or for that matter any market, regardless of what time frame or what direction, have difficulty in deciding what to trade and then exactly the process which is entailed in managing the trade afterwards. Well, I'm going to show you how simple it is, and through this process you'll be able to manage any trade in any direction. You'll know exactly how much to buy, where to sell, and what exactly you want to be trading. For example, let's look at this chart example in FAST. Now we just have the stock plotted here with the 50-period moving average, and looking back in hindsight we can see that, well, the stock is above, and as it goes above the 50 then it drops below. And when it looks like it's going lower, it decides to go back above. So just from past reference, it would appear as if this is going to roll back below the 50-period moving average, perhaps fill this gap right here. With the strategy we're going to be talking about today, we're going to show you how it would have generated a buy signal right here. Now we all know that some buy signals are better than others. Some work and have more consistency than others. I'm going to show you how you would have been able to validate this and seen that this was a high probability setup and taken the trade through this process. And then once it went in your direction, you would have known how many shares you would have been purchasing in the beginning and known exactly where to exit prior to the stock running out of gas and ultimately failing after that. So this promises to be a great and simple educational presentation, and you're going to see how all of this is being able to generate through our PTS Primo charting platform. It's the trading educational portal that makes trading simple. All of the parts of this process are going to be included in the platform, so it's just virtually one click away for you to follow this process. So welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. About 8 or 9 years ago, I teamed up with Pro Trader Strategies with the only goal of teaching and educating students around the world all the things that I've accumulated in my 41 years of trading. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist, hence the name Specialist Trading. A specialist was someone who made markets in about 50 or 60 stocks. So if you wanted to buy or sell a stock, you had to go up to the trader who specialized in making a market. So I made markets in IBM, US Air, Waste Management. I traded during the crash of 1987 and the bull market that followed. I've been involved in just about every market environment you can think of. Crazy markets, flat markets, boring markets, straight up, straight down markets. I traded just about every system or technique or method you can think of as well. So if you've spent $10,000 on some class or some course, I've already traded it. I know if it works in terms of consistency or not. So I'm here to shorten your learning curve. I can tell you what works and what doesn't, and then I'll mentor you along the way. That's what we do at Specialist Trading and Pro Trader Strategies. We simply want to educate you so that you can be in charge of your own financial destiny. I'm going to show you a simple, easy to follow process today that you can apply for not only stock trading and stock selection, but for virtually any market if you'd like. But before we begin, as always, we are first required to share our disclaimer with you, so please take a moment to view it. I'm going to show you a lot of performance results using this process, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all examples are strictly for educational purposes only. And once again, as you're taking a moment to view our disclaimer, I would like to invite each and every one of you to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. You can go on there right now and check out some of the things I've posted lately, anywhere from little bits of financial wisdom to actual signals that our strategies have generated. Okay, so as I stated in the opening statement, we are an educational company. We're a little bit different from other webinars you may have attended in the past in the fact that our only goal is simply to educate you. We're not here to sell you some fly-by-night system that never loses, been back-tested 20 years, that it never fails. We don't believe in that. We know that what it's really about is consistency. That's what you should be looking and searching for, not some master system or some technique that no one knows about. Trust me, it's all been done before. I've probably traded it in the last 40 years, so I know if it's going to work in terms of consistency or not. So what we want to do is simply teach you so that you can put the power back in your own hands. Remember, I was taught these same things some 40, 41 years ago, and they've allowed me to trade for the next 4 decades. So hopefully they'll be able to do the same thing for you. So this is going to be an educational class. Hopefully you're going to learn a lot of things here you'll be able to use and apply with your own trading in the future. But before we begin, since this is a class today, I want to take your questions, but we don't want to stop for every slide the way some other webinars do. So if you have a question, please wait till the end of class to ask them, and I promise I'll get to each and every one of them at the very end. The only question I will answer is this being recorded? Yes, it is. So if you're having technical difficulties or if you have to leave early, we will send each and every one of you a link to this recording. So we have a good crowd here today. So please, if you have a question, wait till the end so that we don't slow down the presentation. All right, with that said, let's begin. Now we're going to be talking about strategy number 4. In other words, in order to implement this process, we need a method or something to trade. So you can apply this process to virtually with any strategy you like. It really makes no difference. It could be one of your strategies. It could be something from another educator. But we feel it's so simple because everything is just one click away on our platform. So let's talk about one of our most consistent strategies, which is strategy number 4. Now, some of the highlights, it's for all traders. So it does not matter. It really doesn't matter if you've been trading 2 weeks or 20 years. Everyone gets the same basic format, and then we work out from there. Now, it was originally designed for traders looking to catch quick momentum moves. When I first traded it some 4 decades ago, I was in and out with strategy number 4 in about 5 minutes because I was on the floor day trading. But we've devised ways to stay in strategy number 4 setups for weeks, months, even years if you'd like. It's a very moderate number 2 intensity level. So it's not something that is so intense you can't leave your computer, or something that's so relaxed you never have to watch it. You just enter an order and walk away. It only uses one indicator, and I'm going to share with you what that is today. You can apply strategy 4 to any time frame, any direction, in any market. Now today we're going to focus on stocks because we're talking about daily stock selection. But it doesn't matter. You can use it with any market you like. Now, if you are a member of our strategy number 4 course and our platform, you will receive automatic buy and sell indications in the form of up and down arrows. They automatically indicate whether a buy signal has been generated or a sell signal. But remember, these are for educational purposes so that you can check your work. Our goal is to make everyone and get everyone to the point where you can just look at a chart and know if a strategy 4 signal has been generated or not. It's that simple. Our edge here is consistency. Not every trade will work. We're going to show you how you can increase your odds for consistency. But remember, not every trade is a winner. That's okay. You always want to be trading a method that is consistent. You never want to be in a method that promises the moon and that says it will never fail. It has only lost maybe 1 trade in the last 10 years. Run if anyone tries to sell you a strategy like that. It just doesn't exist. It's silly. Maybe it'll work on paper and back testing, but when you go in the real world, those things seldom work. So it's okay to lose as long as you have a method that's able to recoup those losses. That's what consistency means. 2 steps forward, 1 step back. All right, so we're going to be using strategy number 4 in this process, although you can use any of our strategies you like or any one that you currently trade. So let's begin. What exactly is this process? Well, step by step. Step number 1, obviously we want to scan for setups. And since we talked about strategy number 4, the first thing we want to do is scan for nightly setups for the next day. All right, let's say that you're not able to be in front of your computer, or let's even say that even if you are, you're the type of trader that likes to hold positions overnight and look for nightly setups. Okay, so what you want to do is come to our platform. At the setup page, you'll simply go up to the green strategy tab. Since we're trading strategy 4, you'll click that on and you'll get a drop-down menu. You go to scan and this window will appear. All right, it's all pre-formatted for you. All you have to do is hit load symbols. Whatever symbol list you decide, it could be NASDAQ, S&P, futures, it could be currency pairs. It makes no difference. ETFs, it could be Bitcoin if you like. But we're looking at stocks today, so let's say we decided on the NASDAQ 100, okay? It could even be a basket of stocks that you currently trade, maybe 10 or 20 stocks you like to look at on a nightly basis. Makes no difference. We show you how to do that. And once this comes up in a matter of seconds, all that's left is to hit scan. This whole process takes maybe about 20 seconds to do on a nightly basis. Now you'll see an either green or a red horizontal bar. This means that the green is a buy signal for that particular stock the next day. The red is a corresponding sell signal. Okay, so it's that simple. So you'll have a list that night, maybe about 10 or 20 stocks, and you can go through them after going through step one, which is the scanning phase. Let's say we scanned and we saw a buy signal in our friend here, FAST. This was the stock we looked at in the opening segment. All right, so as we can see here, a buy signal is generated. Now, once again, we teach you all the rules to what generates a strategy number 4 signal, but that's okay. This is for educational purposes only. You don't want to look through 500 stocks every night, and so you can just automatically see here. Once you get to the point, you'll be able to notice that, yes, that is a valid strategy number 4 signal. But as we said earlier, we know that some signals are better than others. Some have a higher level of consistency than others. So how are there ways in which we can increase our odds for success in terms of consistency? Well, this brings us to step number 2. We want to choose stocks with a strong sloping 50-period moving average. Now, why do we want that? Because if we get a buy setup, we have found, and students have reported back to us, that if you have a strong upward sloping 50-period moving average, that means it's a lot of momentum in that particular setup. That means, in other words, if you were rafting down a river, that there's a lot of rapids there. There's a lot of strength in that current. After all, if you're going down a river, you don't want to be basically canoeing in a pond. It's going to be hard getting from A to B. But if you have a strong current, that's a nice way to go down the river very quickly, and it'll take you where you want to go very quickly. It's the same way with the 50-period moving average. But how do we know what a strong slope is? I mean, we have to quantify it, right? We can't just say, well, that looks like a strong slope to me, but another trader may say, well, that's not really that strong. So we've come up, I devised a great tool that is only on our platform. I devised this with ProTrader Strategies, and this is our custom crosshair right here. It's one click away, it's a custom icon, and it's a tool that will help you define whether you have a strong slope or not. All right. Once you click that on, it's very similar to a standard crosshair where you see a horizontal and a vertical line intersect each other. But we've added a couple of more lines right here. Now here is the standard vertical line, and here's the standard horizontal. But we've added some crosshairs right here. How does this work? If you are buying, what you want to do is, you can see, take your cursor here and move the apex right to where underneath the signal where you touch the 50-period moving average. The last bar where it touches the 50-period moving average. You don't have to be touching the actual bar. It's just below it wherever the 50 moving average is, okay? And you want to intersect that. Now you want to see where the 50-period moving average is in relation to this horizontal bar and this diagonal bar right here. Because what you want to see is that it is as far away from that horizontal bar as possible, all right? Now, it can be below it, but the further away, the better. That shows you a stronger slope. And the closer to this line, the better. If it's almost parallel with this, that's a good sign as well. So we can see here that the 50-period moving average is below. It's not as close as we'd want, but it's still okay. So this is in the buy zone. So this is validating that it's okay to take this trade. You have a higher level of consistency than, let's say, a setup that was with a kind of sideways or flat moving 50-period moving average. All right, so that's step 2. We've now validated this so that we have a higher consistency level to this setup. Now we go to setup, or step number 3, and we apply the RPS method. What exactly is the RPS method? Well, I've talked about it in individual presentations before, but for a brief refresher course, without getting too deep in what the method is, it's a simple mathematical formula that automatically decides how many shares to trade. As I've seen in my 41 years of trading, so many traders, and I'm even talking about experienced traders, make their decision on how many shares, how many contracts to buy or sell based off a guess, based off a whim. In other words, a lot of it is emotion. Let's say you had a good trading day this last week. You say, you know what, I feel really good. I'm lucky. I'm going to bet the farm, okay? And you bet far too many shares. You purchase far too many shares. Or let's say you've done well, but you think your luck is going to end. You're scared. So you buy the least amount of shares you can think of because you're scared. You don't think it's going to work again. Or let's say you've had a series of losses and you don't even take the trade because you think, God, if I take another more loss, I'm going to wipe myself out. I can't take this trade because I don't know how many shares to trade. This is the way most people trade, and it's too bad because oftentimes your emotions get in the way, and if you have a clear-cut plan that takes the guesswork out of how many shares or contracts to buy, you'll still be able to be in the game often, even if you have a losing streak. So let me show you what we mean here. Once again, on our platform, we make it simple for you. So now that you've decided that this is a valid strategy for, and you've got a strong enough slope, you once again go up to our icon list here and click on the RPS method icon, and you'll see this little calculator up here. This is automatically going to decide how many shares you should be trading, but you have to input some certain numbers. So let me show you what to input, and it takes roughly about 5 seconds to do, but we'll go through it slowly. Here's the calculator that appears on your chart automatically. Now, going forward, for all intents and purposes, let's just say you have a $25,000 account. It makes no difference if you had a $500 account or if you had a $1 million account. We're just going to say you have a $25,000 account going forward for today's example. And what you want to do is you want to have a certain amount that you're going to risk in terms of percentages. Now, the standard benchmark for that is 2%. Okay? Now, you can risk more if you'd like. It would be preferably if you stuck with a 2% as your standard amount that you're willing to risk. Now, you can risk less if you want. You can risk 1%. You can risk half of 1%. I basically, most of the time, risk about 1% of my capital. It's up to you, but the benchmark is 2%. You shouldn't go over that if you don't have to. All right? Now, we know we have a $25,000 account. We know we're only going to risk 2% of that. Now, where are we going to enter and where are we going to place our stop? Now, we know for every strategy, for every method, there are different entry points and different stop placements. For, once again, simplicity's sake, as we look at a chart, let's just say on all the examples going forward today, we're just going to make it simple. We're going to enter on the close of the bar and place our stop just below the low of that, okay? Just to make it simple. Now, at Specialist Trading and Pro Trader Strategies, we have numerous entry points and we have numerous stop placement points. But just to make things simple today, we're always going to be entering at the close of the bar and place our stop just below this bar, okay, one tick below. So that would give us an entry point of 52.70 and our stop at 51.85. And that's it. Once that happens, you just simply hit calculate and you'll see all the results in the right side of the calculator. So the total amount you're risking is $500. You remember, you're only going to be risking $500 out of this $25,000. Why? Because you said you only wanted to risk 2%, and 2% of $25,000 comes out to $500. So you know that's the most you can lose, $500. Now, what does that come out to in terms of how many points you're risking? Well, you're going to be risking 85 cents, not even a full point, because your stop, if you entered at 52.70 and exited at 51.80, you're only risking 85 cents. Okay, that's not even a full point. So it calculates that you could buy 588 shares. That's great. This is the way most traders jump in. Well, they go, that's great. So I'll just round that out to $600. Here is the beauty of the RPS method calculator. Look at the very bottom column, the total investment. You are investing a total number of $31,000 if you buy 588 shares. Okay, sounds good. But what's the problem? The problem is you only have $25,000. You can't invest $31,000 if you have $25,000. Okay, you're going to need to come up with an extra $6,000 before you buy that amount. And you say, but I only wanted to risk 2%. We're going to have to change our numbers. And the easiest thing to do is just change your amount of risk in this column right here and go from 2%, let's say, down to 1%. Okay, once we do that, these numbers all stay the same other than we change to 1%. But now we're only going to be risking $250 out of our $25,000. Our risk per share, or our points that we're risking, is still only 85 cents. And we can now buy 294, or round it out to 295 shares. Why? Because the total dollar amount we're invested in is a little over 15,000, which comes into our 25,000. So this calculator automatically calculated it for you, where you don't have to sit there and go, gosh, I don't have that much money to risk 2%, so what do I do? I mean, how much should I buy? Should I just round it down to where I think and start adding, subtracting, get the calculator out and start trying to do a number of calculations? No, just change your risk percentage point to 1%, and it'll automatically have it done for you. Now, I spent a good 2 or 3 minutes on this. This literally takes you 10 seconds to do. All right. So we know we're buying 290, let's say 295 shares. So we're buying 295 shares. So we know that this is a high probability setup. We have a nice slope. We're going to buy 295 shares at the close, and we'll place our stop right here. And now that we're in the trade, where do we get out? How do we exit? You know, so many traders say, well, I'll exit. I'll get to a point where I feel comfortable, and I'll know when to exit when I get there. Okay. Once again, you're leaving everything up to chance. Everything's a guess. You have to have a little structure. The beauty is we provide this all for you on our platform, because the next step is to simply go to step 4, which is choose your exit levels. And we have it already pre-canned and defaulted for you in the platform. We make it that simple. Now, once again, at Specialist Trading and Pro Trader Strategies, we have numerous exit levels. We have numerous entry levels. We have numerous stop placements. We're only going to focus on one of the simplest, which we have here today, which is our range extensions. All you have to do is double click the green arrow, wherever this setup was, double click this, and you'll see this little box appear. All right. Now, we have some entry points right here, which we're not going to be discussing today. We're only going to be talking about range extension exits. Click on that, and once you click that on, you'll automatically see level 1 and level 2. These are different exit points that are high probability for this particular setup. They're based on the range of the setup bar. Okay? They're that simple. And you know, in our courses, in our classes, we teach you how to calculate this, but it's automatically done for you. So even though you know the calculation, it's automatically for you. Okay? Now, let me show you the way most traders would like to trade this. There are different ways to do it. You could sell everything at the first level. You could sell everything at the second. You could sell a portion at the first, a portion at the second. Let me share with you what is the most standard, and I would say the most conservative way to apply these two different exit levels. All right? What you want to do is wait for the trade to unfold, and once you get up to the first exit point, what you would do is move your stop to unchanged where you bought right here, okay? So this means if it runs out of gas and decides to go lower, at least you didn't lose anything. But if you wait to exit everything here and your stop is at unchanged, well, guess what? You're going to have a better risk-reward ratio. Remember, we dropped it down, so we're only risking $250. Remember, we went down to 1% of $25,000, which is $250. So that was our risk. We risked $250 to make this amount. We exited right here before the sell-off, and I believe we would have exited and made, let's see, let me go back here and backtrack. Where we entered was at 52.70, and if I go forward here, we made roughly about 8 points. Okay, now 8 points on $250. That's a very nice amount of money to risk $250. So you see here how you did very well on this particular setup. Now let me share with you some more setups that are even better than this going forward, using all the things we just talked about, and these are recent examples, okay? So these are things that happened in the last month. Some of these things happened within the last week. Okay, let's look at HAS. We scanned the night before, and we see that there was a valid signal, strategy number 4 signal, to go long. But what do we want to do? We want to make sure we have an adequate enough slope on the 50-period moving average. So we click on the custom crosshair, we apply it, and we see here that we're once again right in the middle. So we're okay. We're in the buy zone. So it's all right. Now remember, the closer you are to this horizontal line, that should tell you most likely there's not a lot of momentum there. That doesn't mean the trade's not going to work out. No. But it's not a high probability setup. So you can still take it. I mean, there are a number of setups where you will still have a nice trade there. But it's up to you. We're just trying to give you the highest probability. Okay? So this falls in the buy zone. Remember, we are below the horizontal line. We'd like to be closer to this line here, but that's okay. It's still valid. So we want to take that trade. Now we click on the RPS calculator, because how many shares are we going to buy? Well, here's our 25,000. We risk 2%. Our entry would be at 90. That's where the price closed, and our stop would be just below that setup where the green bar or green arrow is at 88.15. So once we calculate, we see that we're risking $500. That's 2% of our total capital. Our point risk is 1.85. That's the amount of points we're risking. And here's the amount of shares we can buy. 270 because it falls in. We're risking 24,000. We're just about using all of our capital. Now, I know a lot of you would say, well, Steve, I don't like to use all of my capital. I like to leave room for cash. I also would like to leave room for other trades. That's okay. Remember, you're only risking $500. You're not going to lose 24,000. But if you want the capital just to have some cash, or if you like to get into other trades, you may want to decide not to take this trade. That's the beauty of the calculator. It automatically tells you what your total dollar investment is. But let's just say you only want to trade one trade at a time. Okay, we can buy 270 shares. So let's say we purchase 270 on the close at the same price. And now where do we get out? Well, we calculate our range extensions. And here's range extension 1 and exit range extension 2. Okay? So we see here we exited and we made, using the setup I shared with you today, where once we get up to range extension 1, we move our stop to unchanged and we exit everything at level number 2. Well, we made nearly 5 points, 4.94 points on 270 shares. That would have come out to about a little over $1,300 less commissions in 2 weeks. Not a bad trade, right? Not a bad setup. And we had everything right there for you. Now, is this guaranteed to work every time? No, we're just trying to make it consistent. All right, so you see you exited. The stock continues to go up a little bit more, but look what happens. All of a sudden it sells off. Now, where most people say, well, I'm not going to touch this anymore. I was lucky, but it's not going to happen again. Well, we don't think like that. We just do whatever the market tells us. And what's the market telling us? Well, if you scanned again, if this was in your list of stocks you like to trade, it's generating another buy setup. Now, remember, you don't have to wait to do this at night. You could have seen 5 minutes before the close if this was a buy setup and purchased on the close. So I know a lot of you are saying, well, how am I going to buy at that closing price if I got the signal the night after? Well, your scan could be generated a minute before the close. And then if you see that it falls in line, you can buy it right on the closing price. Well, here we have a buy setup right here. First thing we want to do is make sure that we have an adequate sloping 50-period moving average. Click on the custom crosshair, place it right on the 50-period moving average, and once again, we're in the buy zone. We're a little bit closer actually to this lower diagonal line, so that's good. We're okay. So this is telling us there's a nice upward slope. We click on the RPS calculator, plug in our capital requirements, our percentage, which is 2%. Remember, you can always alter this. We would suggest you alter it lower as opposed to higher, but you can keep it at 2%. Your entry is the close at 93.69. Your stop is 1 or 2 ticks below at 92.45. Once you hit calculate, you see you're only going to be risking $500 of your capital. The points risking are 1.24. The total shares you can buy are 403. Wow, that's pretty good. Before you only bought 270, but look what happened. Once again, our investment is calling for $38,000 roughly. How much do we have? We only have 25,000. So the beauty of the calculator is it told us we can't risk 2%. We have to go lower. So let's go down to 1%. Once we do that, we have our stop and entry at the same exact places, but our share size goes down to 201 now, okay? So you can round that off to 200. You can round it off to 205 if you like, because you have plenty of room left over. You're only using $18,000, $19,000. So once we know how many shares to buy, we simply double click on the green arrow and we click on range extensions. Here's level 1 and here's level 2. Okay? So it seems like a pretty quick trade, not that far away. And look what happened. The next day you would have entered, and the day after that you had a huge gap opening where you wouldn't have, had you had an open order, you wouldn't have exited at level 2. You would have actually exited up here for an 11-point gain with 202 shares. That's $2,400, about $3,700, closer to $38,000 in just about a month's time, trading using this simple, easy to follow, step-by-step process. This is how simple it is. You don't have to overcomplicate your trading by looking at support and resistance, by looking and seeing what the institutions are doing, or by looking at fundamental news, what the earnings were. Obviously, some news came out which caused HAS to go up tremendously, all right? How in the heck did we know 2 days earlier? We don't follow fundamental news. We don't have anything against it, but there's no need in our courses to follow it if you don't want to. So how did we know to buy that? We knew because we had a strong upward slope. The rules of strategy number 4 came into play and generated a buy signal. That's it. And then we just managed it by telling you where to enter how many shares to buy, and where to exit. And guess what? $2,400 in about 2 days. Now let's look at another example here in BMRN. This was coming into June. We have a buy signal, all right? We place the custom crosshair and we see that we're in the buy zone, so it's okay, all right? We get the calculator. It tells us we can use or tells us we can buy 138, 139 shares. Let's round it off to 140 if we want, because we're only using 12,000. We have plenty left over. We're still only using 2%. So we want to buy roughly 140 shares. We double click on the arrow, and that gives us our range extension. And we want to move our stop to unchanged here, and we want to exit everything right here. All right? So now that we know that, we simply enter the orders and we sit and watch. It's like fishing. It's so simple. We don't have to look and monitor what's going on in the world. We don't have to look at interest rates. We don't have to see what the earnings are going to be, or we don't have to see what the jobless claims are. We have everything protected. We have our stop in there. We have our exits in there. We know how many shares we purchased. It's simple. We just sit and wait like fishing. You cast your line and then you wait to see what happens. And in about a month or so, you would have exited at level number 2 for a nearly 9-point gain. You had 140 shares. You made over $1,200 in about a month. Not a bad trade, okay? Very simple, very easy. Had you waited for price to get to level 1, well, here's where your stop would have been. And it almost got there, but you never got stopped out unchanged. And you would have exited with a 8.92 cent gain. All right? Okay, so we continue to scan on a nightly basis. And coming into July, guess what? We have another strategy, number 4, buy signal here. We check with our custom crosshair to see. And this one is much better. You can see it's almost parallel with the bottom diagonal line. That's a very good sign. If you see it going parallel with that, that's a good sign that there's a lot of momentum there. So this is a high probability setup. Next thing we do is add our calculator. It tells us with 2% we can buy 208 shares. Okay, we're only using 19,500 out of our 25,000. So this looks pretty good. We can round it off to 210 if we want. We click on our range extensions so we can automatically know where we want to exit. Now once again, if you wanted to sell some shares here and sell some here, you can do that. We would suggest just using this as a point to raise your stop. And as you can see, in about a week, you would have exited with over 6 points, 210 shares, that's $1,300. So roughly you made about $2,500 using this technique just in a month or two. Let's look at a higher time frame, because we know a lot of you don't just trade daily bars. You'd like to invest with this. Well, just because you like to swing trade or because you like to look at higher time frames, maybe to invest, weekly, monthly, even yearly charts, it makes no difference. You can still apply this process with our strategy and with all the tools we're giving you on a higher time frame. And we all know that Apple has been going up. It was announced last month. It was the first $1 trillion company. I know Amazon now has joined it. But let's look at Apple before it was announced it was a $1 trillion company. How could we have taken advantage of that? Well, here's a weekly chart of Apple going back to April. Now in April, strategy number 4 generated a buy signal, okay? Let's go through the same process. Even though we're looking at weekly bars, we're going to apply the custom crosshair. And even though this wasn't a great indication because we were close to this line here, it still was in the buy zone. So if you felt strongly about Apple, you could take this trade. Remember, it's not required that you have to have a strong upward slope, but it's just something that will increase your odds for consistency. Strategy number 4 in and of itself already has a high level of consistency, but we want to always see if we can increase our chances for success in terms of consistency. So even though this is in the buy zone, it wasn't a great example, but it's still okay. So let's say you decide to purchase it. Now, you have a $50,000 account because you have a longer time frame, so let's give you a little bit more money, all right? You could still do this with a smaller or even larger account, but we're now with a $50,000 account, we're still only going to invest 2% of that. We're only going to risk 2% of that. Our entry is the same place where it closed at the end of the week, and our stop price is just below that setup bar, okay? Now, once we hit calculate, we see that we're only going to be risking $1,000. So if things go the opposite way, the most we'll lose is $1,000, okay? Because that's only 2% of our 50,000. How much points does that transfer over into? 22 points, okay? That's what you're risking in terms of points. So this allows us to buy 45 shares. Now, we see here that we're only using a little over $8,000 of our 50,000. So if we wanted to, we could either keep that at 45 or keep it to 50 shares, okay? So let's say we rounded it off to 50 shares. All right, so we're buying 50 shares of Apple at the end of April. Where are we going to exit? Well, we double click on the green arrow, we hit range extensions, and once again, automatically, we see exit level 1 and exit level 2. Let's use the same process. Once we get up to level 1, we're going to move our stop, which is roughly here, to unchanged. So if things go poorly for us, at least we don't lose any money. We'll break even. And we're going to exit everything up here. All right, remember, this was in April. This was a good 4 or 5 months ago. So we all know what happened. In fact, just yesterday on a weekly chart, we got up to the exit level at 229.15. I think we're a little bit higher than that today right now. But we had, let's say, 50 shares. We made 45, a little over 45 points. In 3 or 4 months, we made a little over $2,200. That's not even on a round lot. On a half a lot, on 50 shares, we made $2,200. That comes out to, I believe, about 5% we made on our money. Okay, not a bad long-term trade. Let's say you had more than that. Let's say you had 100,000 and 200,000. Think what you could have done on that trade. And it was all automatically there. You scanned on a weekly basis. The week before, you saw a setup with strategy 4. You checked with the tool, the crosshair tool, to make sure you had an adequate slope. You used the RPS calculator to define how many shares you could purchase and what your risk would be. And then you simply used our proprietary exit levels. It's that simple. Trading is really simple when you know how to manage a trade. And the beauty is we make it simple for you by having it one click away. Now, I know a lot of you say, well, what about news, Steve? I know a lot of times news comes out, and news will come out, and I may be in a trade, and it'll go the exact opposite, or the news comes out and I missed it. I was thinking about something, purchasing it. I just wanted to wait for that news, and once the news came out, that's when I bought it. Well, we're not going to tell you that all of our setups work prior to the news, but it's been my experience and a lot of our students that have written back to us in testimonials saying that oftentimes you will get setups prior to a news event, and they'll be in the direction of the news. Let me show you something that happened just the last few weeks ago. A news event happened in Nike. Nike stock hits an all-time high on an analyst upgrade, okay? This was on the 20th of August, okay? 2 Wall Street analysts raised their rating on the sneaker giant on Monday, sending Nike shares to an all-time high. Shares of the Oregon company jumped 3.1% to 82.18. Now, if we look at the chart in that, we see here that this is the way most traders trade. They'll say, I've been tracking this, and now I'm going to jump in because now's the time to jump. This is great news. I've liked this company. I'm going to invest in this. And so now's the time to buy, right? Well, maybe if you're a long-term investor. If you're a swing trader, as we've seen in the news of lately, I think price is actually lower than where that news event came out. But let's see how this simple step-by-step process could have helped us. Because if you have used the nightly scanner going back to July, you would have seen that a buy signal was generated July 25th in Nike, well before that news came out. And it looked as if the stock was going lower, as if it was going to come all the way down here and fill this gap. But it was a valid signal. Now let's go on to step number 2. What do we want to do? We want to measure the slope of the 50-period moving average. We want to quantify it. So we get our custom crosshair, we place it right on the 50, and wow, look at this. The 50-period moving average is almost touching the lower diagonal line here. In fact, it's parallel to that. So this is a very good sign that we have a lot of strong momentum. Is this guaranteeing us that we're going to have a profitable trade? No, there's no guarantee. But it's telling us that there's a lot of strength in this. So the odds are in our favor. It's not guaranteed, but the odds are in our favor. We have strong momentum, seeing how close the 50 is to this diagonal line here. It's well away from this sideways line. Okay, so we have that going for us. Now, what we want to do is get our RPS calculator. We have a $25,000 account. We only want to risk 2% of our capital. Our entry price is the same place where the stock closed on that day, and we're going to place our stop just 1 or 2 ticks below. We hit calculate. We're only risking $500 of our capital. The point risk is a little over 2 points, and this tells us we can buy 238 shares, okay, because we're only using 18,000 of our 25,000. So we can round it out, let's say, to 240 shares, and we'll still be in line with our managing of this trade. All right, so we buy 240 shares right here, Okay? Now, where exactly do we exit? Well, we simply click on our range extension. You double click on the green arrow and the range extension arrows appear. So we can use the same process. If we get up to range level 1, we only want to move our stop to unchanged. If we get up to exit number 2, we'll get out of everything. And that's what we did. We exited right here a week before that news came out. We exited with a 4.27 point gain. We had 240 shares. So in just a little over 2 weeks, we made over $1,000 using this process, okay? Now, had you waited for the news, you most likely would have purchased a week later right where we exited. And look what's happened in the stock. The stock has gone nowhere. In fact, I think this morning the stock was down here. Sorry, this isn't a up-to-date chart, but the stock is much, much lower. So if you like to wait for news, I'm not saying it's guaranteed, but oftentimes it's too late. And strategy 4, through its proprietary pattern recognition, would have had you in the trade. We would have managed it for you, and the platform has it all one click away, the simple to follow process. All right, so let's recap before we go to questions and answers. Remember, step 1, daily strategy scan. Even though you can scan intraday if you'd like, let's say 5 minutes before today's close, you could do a scan. But if you're not able to be in front of your computer, you can scan that night. Look at any list of stocks you'd like. It can be one of your lists. It can be ETFs. It can be indexes. It doesn't matter. It can be the NASDAQ 100. And whatever you come up, you can see in a matter of seconds a series of buy signals or sell signals. All right? Once you decide on which one you're interested in, look for strong sloping 50-period moving average. And the way to do this is by using our new proprietary custom crosshair. It's a great, great tool to see if there's momentum in the trade, because momentum is what we want. Strategy 4 is a momentum-based pattern recognition strategy. So we want to jump into the river and know that there's a very strong current behind us. We don't want to jump into a pond and say, how come I'm not going anywhere? Why am I just staying in the same spot? But if you've ever jumped into a river and there's a long current, you're really moving very quickly with the current as you're going down the river. That's the kind of feeling we want with the sloping moving average. Step number 3, we want to apply our RPS method, okay? The RPS method is a great, great tool. It's a calculator designed to take the guesswork out of your position sizing. It automatically decides for you how many shares you should be buying when you are in sync with a certain percentage that you want to risk and a certain amount that you have to trade with. And it'll keep you in there, and that way you'll be able to have this a longevity where you don't bet the farm on one trade and lose everything, and then you say, boy, I have no more money to trade with. Or you don't have a series of winners, and you say, gosh, I didn't bet the correct amount because now I just only made a couple of $100 and I had 5 winners. Had I stuck to this percentage, I would have had a lot more. So this is really good whether you're in a series of losses or a series of winners. And then lastly, you want to choose your exit levels. Remember, we have a number of entry and exit levels in all of our courses. We've just picked the most basic ones for you to apply, and the range extensions are extremely simple. If you use that simple format we taught you today, where level 1 is you move your stop to unchanged and exit at level 2, you'll have a really good risk-reward ratio. We see most of the trade examples I shared with you, you were basically making anywhere from over $1,000 to $2,000, and you're only risking $500. So that's better than a 2-to-1 risk-reward ratio. Here's the beauty of this simple 4-step process. It's all one click away on our new PTS charting platform. I designed it with Pro Trader Strategies to make it simple so that it would just be one click away, and this entire process could be done in just a matter of minutes on a nightly basis. So we have a great, great offer for all of you today for attending and seeing this presentation. We're going to offer you our strategy number 4 course. You're going to get instant access, detailed instruction. We're going to give you all the entries, all the exit, all the different stop placement. You're going to get the educational buy and sell arrows. You're going to get complete strategy rules coming with educational mentoring correspondence through yours truly. Remember, this strategy, even though we share with you on stocks today, can be applied to virtually any market, any time frame, any direction. But we're not going to stop there. We're going to throw in 6 months of our PTS Primo charting platform where you can go through this simple 4-step process on a nightly basis. We're going to throw that in for free. So you're going to get 6 months of our platform totally free. That's a nearly $900 value we're going to just give to you for 6 months, no charge at all. Let me show you what else is included with that. Obviously, you're going to get strategy number 4. You're going to get the enhanced buy-sell line features. The buy-sell line is our 50-period moving average, but we're going to give you 4 different ways in which to view the 50-period moving average. It's a great, great tool, and you'll enhance your trading even more. We're also throwing in 2 short-term trending techniques that come automatically included with that. You'll get the signal scanner, so you can scan either intraday or on a nightly basis. This also comes with over 90 of the most prominent technical indicators, but we realize since we have a technical bias, not everyone is a technician. That's okay. Even though fundamental news is not required in our courses, we realize that many of you like to base your methods based on fundamental news. That's fine. So we're throwing in free Bloomberg TV. We have included in our platform a media page where all you have to do is click on the media icon and you'll see this media page. You get live Bloomberg TV. So if you are interested in any earnings reports, any news events, anything that's happening on a financial level, it will be broadcast to you live on the platform as it's happening. That's included with this free package. And then lastly, you get personalized tech support. If for any reason you're having difficulty watching something, this also comes with a lot of tutorials as well. If you have difficulty loading the videos to watch the tutorials, we will be there in a matter of moments to help and resolve any issues that you may have. This is all included for 6 months. It's all free. There's no charge at all. Now, this package would normally cost you thousands of dollars to get this, altogether with the PTS Primo charting platform along with strategy number 4. We have a great special for you today. For all the people in attendance, we're giving you the strategy number 4, the full course along with educational mentoring correspondence, plus 6 months of the PTS Primo charting platform for free, and we're reducing the price. So you're going to wish you had this course a year from today. You're going to wish you had taken this. Why? Because we're dropping the price down with the scanner included down to only $9.95. Okay, almost a 50% discount. And this includes the scanner and includes all the process I talked with you about today and 6 months of the PTS Primo charting platform. Okay, now if you're still having difficulty coming up with the $9.95, don't worry. If you contact Pro Trader Strategies, they can work out some type of payment plan for you as well. So for a small deposit, you can still be up and running and get this process as soon as possible. Oh, I hear a bell going off there. That must be, Brad, I think we can hear you in the background if you could lower the volume there. That's Pro Trader Strategies online with us right now. So what we like to do is give you an offer, a chance to do this right now. Here's what you have to do. Contact Pro Trader Strategies. That's probably the phone you hear, probably people calling already trying to get this offer. That's Pro Trader Strategies in the background. You can email them. I would suggest do is just what you just heard. Contact Pro Trader Strategies by calling them at 310-598-6677. Now that link you see at the very bottom is the sign up link, and you also get more information. You can copy and paste that link onto your browser, but there's a live link in the chat box on the far right-hand corner of today's GoToWebinar column. So you can simply click that on as well. Now, I'm going to leave all this information up here. Remember, I would suggest calling Pro Trader Strategies because you can put together a payment plan. As I said, when you heard that phone ring, that was probably someone in the background calling up for a payment plan. That wasn't rehearsed, so that probably was someone calling up right at this moment. So in order to get this deal, this is only for a limited time only. I would contact them as soon as possible if you're interested, okay? So this information is up here. I'm going to open up the question and answer box. Let me see here. Dennis asks, can I use options? Yes, you can. Now, here's the only difference. Remember, all of our setups and strategies are based off of what the price of the stock is doing, okay? So let's say you're looking at that Apple chart, which I shared with you. You can't use the RPS method, the calculator with options. It won't tell you how many options to buy because options are based entirely on a different formula. You see, the stocks are just based off 2% of your capital and where your exit is and where your stop placement is. Where options are different. Options are based on, you have time period, you have, the premiums involved, and so the price is always fluctuating differently than the way a stock fluctuates. So it won't give you a place in which to buy or how many option contracts to buy, but what we tell our option traders is the same thing. Once you get a buy signal and once you've gone through the calculations and everything comes into play with the crosshairs, with the RPS, then simply purchase whatever option you're interested in. It could be a spread, it can be a call, whatever you like. And then that if you get to that stop placement, that's where you should exit the option. okay? And if you get to exit level 2, well, that's where you just sell the option at the market, okay? So we don't know where the exit levels are for the option because of the time delay and also because of the, or time decay, I should say, and also because of the premiums involved. But a lot of our traders just transfer over onto that. Now, the only thing I would recommend, and this is just a suggestion, really not a recommendation, is with stocks, if you're looking at daily time frames, you may want to give yourself at least some time, maybe a month or two, because as you saw here in some examples, you know, even though you had a nice profit, it took maybe a month for that to happen. So give yourself some time. Don't just buy a weekly option, okay? BK says he joined late. When is the recording available? Well, as soon as we finish the presentation today, and later on today, I believe, or by the latest tomorrow, someone will send you a link to this recording, okay? Someone's asking, what is the slope of the preset crosshair? I don't have the slope per se, but I know it's something we've gone back and back tested a lot. And it's basically, we're just trying to give ourselves a filter. You want to be below that horizontal line, and you want to be above that that other diagonal line there, though. That's the main thing you just have to notice. It's not a system where it has to exactly be there. We're just giving you guidelines. So saying anywhere in between there, it will be a fine place to know that you have some slope with the 50-period moving average. Question, do we have to try one stock at a time, or can we program for 100 stocks and let us know when there's an alert? Well, what you can do is if you like to look at a certain number of stocks, you can look at that and on a nightly basis, and it will, look at those 100 stocks you're interested in. Excuse me. Or you can, if those 100 stocks are in the NASDAQ, then just look at the NASDAQ 100. In other words, it's up to you. You can set which stocks you want to look at, but you have to scan to make sure. In other words, if you're looking, it all depends on what time frame. If you're looking at a nightly scan, well, then you just have to scan every night, and there won't be a signal in every stock in those 100 stocks, but there will be setups from time to time. Sometimes it will be a great number. Sometimes there will maybe only be a few, but they're usually setups on a nightly basis. It's up to you to decide using this formula, okay? For the range extension, do you use open to close or high to low on that setup bar? Well, usually for the range extension, we use high to low, but it's all up to you. The range extension is calculated to high to low, but it's up to you how you want to calculate it. And remember, the exits that we share with you on the range extension are just one of the many different exit plans we have. We're just sharing with you one of them. We have other exit levels that are based on entirely different formats that you can decide to use from. And plus, these are what we call fixed exits, meaning that it's fixed where you'll be exiting. We have non-fixed exits, or what they call dynamic exits, where you don't know where you're going to be exiting. You're simply tracking a tool or an indicator, and you'll let the market take you out. Oftentimes, you get even better results using these, and we teach you these in our classes, in our courses as well, okay? Let's see, our Gusham was asking, does it work for Indian stock market? Yes, this will work on any market, on any time frame, on any direction. In terms of the data, if we have the Indian market data, I would contact Pro Trader Strategies. I'm not sure. They're in charge of tech support and of data and of discounting prices for the platform. So call them up. There's no obligation. They would be happy to answer any question you have, okay? Patrick asks, how does the strategy work if we don't get your charts also? Well, we have add-ons for the major platforms. So in other words, I believe you're saying, what if you use TradeStation? Okay, well, if you use TradeStation, we can give you an add-on for that, which will automatically generate up and down arrows when a strategy number 4 signal is generated. But guess what? You don't get the scanner. You don't get the proprietary crosshair tool to tell you the slope of the 50. You don't get the range extension automatic levels. You don't get the RPS calculator. So even though you may say, well, I can do that on my own, that's okay. You're more than welcome to. And everything we teach, you can always do on your own. But why would you want to spend an extra hour trying to figure out all these things when it will take you a matter of seconds on the platform? And you're going to get 6 months of the platform anyway. So why not just use that? You'll see how simple it is. This is the way we have most of our customers. They say, well, Steve, I don't really use those things. I can figure it out for myself. And we tell them, we say, well, listen, you're going to get the platform, whatever offer we have. Some people only get the platform for a month, depending on the offer. Others get it for 6 months, the way we're offering it to you today. And then even after a couple of weeks, we get testimonies from students saying, boy, how could I not use this before? It's so simple. And I know I've cut my research in half by using your tools because it's all right there. And that's what we want to do. We want to make trading simple. We don't want you to go to a platform and spend 2 or 3 hours a night trying to figure out how to open up a chart. I mean, trust me, some platforms are like that. We want to make your trading simple. We want to make it easy because that's the way trading should be. Trading shouldn't take a lot more time out of your night doing all this research and looking through hundreds of stocks. It should be as simple as possible, and so you can concentrate on what you've learned in our courses. You should not have to spend an arm and a leg trying to figure out if this is a good setup or not. We make it simple by giving you all these proprietary tools and techniques, and they're one click away. So why would you want to use it on another platform when you're having it for free for 6 months, okay? Gershom is asking, which other indicators are good with the 50-period moving average for a probability trade? Well, that's all taught in our course, Gershom. So once you become a member of our course, we teach you other things in which to look for a high probability setup. But remember, we're just giving you the tools and information. In the end, it's up to you to decide. Now, a lot of you may say, well, you know what, Steve, the other things you teach in our course really helped me a lot, and I use those more than I use, let's say, the RPS method. Okay, that's great. But some others will say, but Steve, the RPS method will really keep me focused and keep me disciplined and sticking to that percentage that I only want to risk. I swear by that. Great. In the end, it's up to you to decide, not me. A good mentor teaches you how to trade, but he does not trade for you. See, this is what I think what's wrong with the business while I go to my soapbox here is because the business is designed to actually take you out of the game and to tell you that there's nothing you need to do. Just buy this system. It'll spit out buy and sell arrows. You don't need to do anything. You're not a part of the process. Just buy here, sell here, and that's all you need to know, and you're okay. And if that worked, then why is it estimated that 85% of all traders fail? It's because of the fact that they're designed to take you out of the game. The research has shown that most traders fail because, in my opinion, they're not a part of the process. So what we want to do at Pro Trader Strategies is to design a platform to make you a part of the process so that you can make your own trading decisions, not me. Now, I share all these different things I've accumulated in 41 years, but I'm not going to tell you what to trade. It's up to you to decide. I share with them and mentor you so that you can feel comfortable in deciding which one you like. In other words, imagine you go to a restaurant. There's just literally hundreds of meals you can decide from. I give you a whole banquet, a whole feast of things to choose. You can decide what meal you want. I'm not going to tell you what to eat. It's for you to decide what to pick off the menu. It's the same way with trading. We give you things that have shown high levels of consistency, and it's up to you to decide. Now, today I share with you a simple process. There are other processes you can follow that we teach in the courses as well that may better suit your needs. That's okay. As long as you're in charge, that's how you become a consistent trader, okay? People are asking about other strategies. Strategy 1 and 3 are strategies. They're based off entirely different formats. Strategy 1 and strategy 3 are more of a pullback strategy. They use different tools, different indicators, different entry points. But guess what? You can still use them with this process. You can still apply the RPS calculator. You can still apply the 50-period moving average slope with the proprietary crosshairs, and you can still apply our exit levels. It's entirely up to you. So any strategy we have, you can apply these processes to, okay? But they come with a different set of rules. Let's see. People's asking, which 50-period, let me see, which other indicators is good with a 50-period simple moving average for a probability trade? Well, once again, that's all in our courses. It's entirely up to you how to decide that, okay? How does the strategy work if we don't get your charts? Oh, I already answered that for Patrick. So if let's say you get TradeStation or Metastock, or let's say you get Thinkorswim, you will still have the capability to see up and down arrows. You won't have the capability to use all of this other process, plus the other things like buy and sell line features we have, plus the scanner. I mean, the scanner, in my opinion, is worth its weight in gold because it is so simple to scan. I scan in less than 30 seconds. I can scan through the entire S&P and know what the buy and sell signals are for the next day. And then I can have the rest of the time deciding using this process which ones I'm interested in, as opposed to spending a whole hour looking through stocks, figuring out how the scan works. You know, it takes too much time, and trading shouldn't be like that. Okay, great questions. Now, as we get towards the end here, I just want to say this is a great offer, $995. I mean, it's almost discounted, close to 50% of what you'd normally pay for. And on top of that, you're getting the platform for free for 6 months with all those features included. It's a great, great offer. As I said in the presentation, a year from today, you will have wished you took this present offer. So really, jump on board. We're in the last quarter of the year. It's time to take your trading seriously. This simple process will really kick your trading to the next level and hopefully make you a consistent trader. So there's the information in front of you. Contact my sister site, Pro Trader Strategies. There's no obligation. I would suggest calling them to get that great offer or for any questions that you may have, and come on board as a student of mine, okay? So thank you so much for attending today. I wish you all the best of luck as you take one last look here at our disclaimer. I wish you the best of luck, and I really look forward to all of you becoming students of mine in the Strategy Number 4 course, along with the PTS Primo Charting platform. Thank you so much. I'll see you next time. Bye-bye.